Hello everyone, and welcome to this week's edition of Top 11 Markets of the Week, where we dive deep into the most important, popular, and trending markets that are catching the attention of traders worldwide. I'm Mr.NoBody, and today we'll explore the markets that matter most right now, whether you're looking for opportunities, insights, or just a broader perspective on market movement. Let's get started. As we observed the decline of the dollar index beginning in September 2022, an impulse pattern gradually formed. After 5 downward waves, we anticipated a correction pattern, which is typically longer than the trend of wave up, characterized as an impulse pattern in the correction phase. This resulted in the formation and completion of a zigzag pattern for wave B. Now, wave C should be completed, aligning with wave up, or it may continue to advance while remaining within the channel. This can be viewed as a corrective pattern, potentially leading to another extension. Let's examine the 4-hour chart. Wave is an impulse pattern with a developed third wave, resembling a triple zigzag pattern, which closely parallels an impulse pattern. We anticipate reaching a larger wave B, followed by an extension into the bull market, as we had expected in the past few weeks. It now appears that the first wave will experience acceleration, accompanied by a shallow correction and an extension into the bull market. There is a possibility that the remaining portion of this impulse pattern will be shorter than the first wave, completing the zigzag pattern. Please remember the key price point that would invalidate this analysis. The euro and the US dollar, which are inversely correlated with the dollar index, have shown similar impulse patterns in both bullish and bearish markets since early September 2022, although there are slight variations. After reaching their peaks, we observed a market decline followed by a zigzag pattern during the bullish phase. Now, as we enter the bear market, we expect this zigzag pattern to extend. Once this pattern, which forms wave B, is completed, we anticipate a resurgence in the bullish market. For this to occur, the price must remain within the established channel, and the Fibonacci range between 50% and 61.8%. For a more detailed analysis, you can refer to the 4-hour chart. I have labeled the initial movement of the impulse pattern as a triple zigzag, because it does not conform to the typical structure of an impulse pattern. It consists of a simple zigzag, where each wave comprises a triple zigzag that completes wave B. Similar to the dollar index, we observed a rapid decline leading to a flat correction. An extension in the bear market is quite possible, and the next two waves are likely to be shorter than the first. To achieve the outlined objectives, the market must pause after each bearish movement to form a corrective pattern. Following this, a zigzag pattern will be completed, allowing price action to realign with the bullish trend. Since October 2022, the NASDAQ 100 has entered a new bull market cycle. The first wave ended with an extension in the third sub-wave, while the second wave formed a double zigzag, retracing 23.6% to 38.2% of the first wave. The third wave accelerated, with extensions in both the third and fifth sub-waves, and the fifth was nearly equal in length to the first wave. The fourth wave quickly corrected between 50% and 61.8% of the third wave in a zigzag pattern. After this correction, price action returned to a bullish trend, forming a wedge, or leading diagonal, with an expanded flat pattern. Key invalidation levels remain critical for the trend to continue. A corrective pattern proportional to prior waves will be needed, likely supporting further bullish extension to complete wave 3 to a larger degree. Notably, waves 1 and 3 are almost equal, suggesting that wave 5 may mirror this length. A similar structure is also seen in the silver market. On the 1-hour chart, the first wave shows an impulse pattern corrected by a double zigzag, followed by another impulse as wave 3 and a simple zigzag as wave 4. The fifth wave, shorter than the previous two, concludes with a leading diagonal, incorporating 3 cycles of 1 and 2, where the second wave forms a flat correction. This pattern supported last week's bullish advance. As price action nears the key invalidation level, corrective patterns should allow for pauses in the bullish trend. This would help the market meet target levels and potentially break through the channel defined by the third wave's movement, ultimately completing wave 3 to a higher degree. All major indices generally move in the same direction, with some chart similarities, especially between the S&P 500 and NASDAQ 100. However, the Dow Jones has a slightly different structure. In this market, the first wave is an impulse pattern, followed by a running flat for the second wave. In the third wave, although the third wave typically sees an expansion, Wave 1 here showed notable extension with acceleration and shallow corrections. The third wave, though shorter, demonstrates suggestive momentum, while the fifth wave is the shortest within the third wave degree. The fourth wave forms a sideways double 3 pattern, after which we observe another impulse wave followed by a zigzag correction. Given the near equality of waves 1 and 3, continued bullish movement is expected to reach the outlined targets. Each target should ideally be followed by a corrective pattern to allow for consolidation before new price action continues. Be mindful of the key invalidation price. On the 1-hour chart, each impulse wave is followed by a corrective pattern, showing a recurring extension. Notably, the first wave is longer than the subsequent 2 in this impulse sequence. After the first wave was completed, a double zigzag corrective pattern emerged, followed by the current price action. To maintain bullish momentum, each wave's advance should ideally be accompanied by a proportionate corrective pattern before the trend extends further. These corrections may be shallow, respecting the key invalidation level and facilitating upward progress. We will analyze the Nikkei 225 market using the weekly chart. The market began its bullish cycle in May 1970, showing significant growth characterized by an impulse pattern, followed by a large zigzag pattern, retracing between 78.6% and 90% of the initial wave, indicating a wave cycle completion. Currently, we identify the first and second waves of the Elliott Wave principle, with the market in the fourth wave. We expect another bull market to complete a larger first wave, typically following waves 1 and 2, and remaining within a defined channel. The volumes of waves 1 and 2 are nearly equal, suggesting a critical point for this analysis. In detail, the first wave consists of smaller degrees, concluding a second wave zigzag pattern. The third wave represents an impulse pattern, while the second exhibited an expanded flat pattern. The fifth wave exceeded the lengths of the previous 2 waves, completing the third larger degree wave. The fourth wave corrected sharply between 38.2% and 50% of the third wave, leading to expectations of a bullish market ahead, alongside crucial price points for invalidating this analysis. For a closer look, the 4-hour chart shows the first wave's extension, and a well-performing second wave during the corrective phase. The third wave again extended, and with wavelengths equal at its end, it reached about 123.6% compared to the first and second waves, marking completion. The fourth wave took the form of a triangle pattern, and the fifth wave was shorter. The current price action presents 2 scenarios: a leading diagonal pattern or patterns labeled 1 and 2. After failing to surpass the previous market peak, an increase appears likely, emphasizing the importance of key price points for invalidation. The gold market from November 2022 marked the beginning of a new bull market cycle. Initially, the first wave of this larger degree occurred, followed by the extension within that first wave. This was corrected by a double zigzag, retracing between 50% to 61.8% on the Fibonacci scale. Subsequently, the sequence of waves 1 and 2 was formed, which typically occurs at the start of the third wave. After completing the third wave, a triangle pattern emerged in the fourth wave. Usually, the fifth wave in the gold market tends to be prolonged, and we can see an extension in this wave as well. Currently, during the correction phase of the fourth wave, there are two possibilities. We may either face a larger correction, or there might still be another wave left in the bull market. I would like to draw attention to the advancement of the third wave, compared to the first and second waves. Presently, the third wave has progressed to 200% of the length of waves 1 and 2, and there is a possibility of extending to 261.8%, potentially reaching a price of $3,000. To examine the fifth wave more closely, I refer to the 1-hour chart. The first wave displays an impulse pattern, followed by a larger fourth wave triangle pattern. The second wave shows a lateral pattern, and the advance of the third wave is evident, having extended by 200% compared to the first and second waves. Currently, we are expected to be in the fourth wave, which could be a simple zigzag, or a double zigzag pattern before rallying once more to reach a new peak. We should observe the price action closely. The main channel we've drawn might provide support, located near or slightly below the channel's center line, ideally between the 38.2% and 50% retracement levels. After wave B fails in this corrective wave pattern, we anticipate for more upward movements to achieve the previously mentioned targets. It is worth noting the price of invalidation for the first wave. Next, we will explore the third wave, for a larger correction scenario with a conservative outlook, the sequence of waves 1 and 2, and the expansion of the third wave, which has extended by 261.8% compared to the first and second waves of the same degree. The fourth wave was a running triangle pattern. As for the fifth wave, it began with a leading diagonal, and both the third and fifth waves show nearly equal lengths, adhering to expected wave rules. Additionally, the fifth wave concluded slightly above the central line of the drawn channel, which corresponds to the third wave. In this scenario, we are likely to see a bear market transition, and a price break below the fourth wave could be significant as the trend exits another confirmation channel. We should then expect a corrective pattern, which may be either superficial or complex. However, we should exercise caution and refrain from entering this trade near the key price of invalidation in our analysis, as it should conclude after reaching the aforementioned range of 38.2% to 50%. It's also important to remember that the corrective pattern can extend sideways. We will analyze the Brent oil market using the daily chart starting from April 2020, which marks the beginning of a bull market. In this chart, the first wave is visible and has an extension. The second wave forms an extended flat pattern, followed by an accelerating third wave that is slightly longer than the first wave. The fourth wave responds to the upper boundary of the drawn channel and appears as a triangle pattern. The fifth wave consists of 5 smaller waves and is shortened due to the equality of waves 1 and 3, ultimately forming an impulse pattern that indicates a larger first-order wave. Wave it is identified as a triple zigzag resulting from the second wave, although it can also be recognized as a double zigzag. The B wave correction pattern may manifest as either a flat pattern or a zigzag with an extension, eventually leading to the completion of the C wave in the second wave of a higher degree. This should recover within the defined range of 50% to 61% of the first wave, equating to a price of around $68. Thus completing the 8-wave cycle and entering a new bullish phase. It's important to note that since the first wave extended to a greater degree, there is a possibility that the correction pattern may conclude near the end of the second wave of a larger scale. When we examine the 4-hour chart, we observe 3 downward moves from September 2023 that form the W wave. This is followed by a double zigzag pattern correcting wave X, which falls between 78.6% and 90% of wave W. Wave Y, which consists of 2 double zigzags in each wave, corresponds to wave W that has occurred. However, wave X could conclude with a simple zigzag or, before we experience the final decline, it might rise further into the $86 price range and lead to wave Z, which completes this larger correction pattern. We will analyze the natural gas market starting from June 2020, when the market entered a bullish cycle. Based on my observations, I have identified the initial motivational phase as a diagonal pattern, which represents the final wave up, or 1 degree larger. I have examined the gas market using different charts, which show slight variations. However, the second wave has not exceeded the length of the first wave. The upcoming price action may be considered as either waves 1 and 2, or a diagonal leading pattern. Since the previous wave of a larger degree was a leading diagonal pattern, we may anticipate wave C, or wave 3 forming as an impulse pattern. It is important to note this on the daily chart, as doing so could risk invalidating the analysis. Next, we will review the 4-hour chart from February 2024, which shows renewed growth in the natural gas market. In this chart, I have labeled the first wave as a leading diagonal. The extension of wave 3 is characterized by sharp movements with shallow corrections. Wave 4 appears as a double zigzag, while the fifth wave is almost equal in length to the first. The second wave, however, is quite deep and sharp, resembling an impulse pattern. I consider it a triple zigzag that has corrected between 78.6% and 90% of the previous wave. This type of correction typically occurs in the second wave of an impulse pattern, and also in the second and fourth waves of a diagonal pattern. For the upcoming price action, we have a clear identification of the first and second waves, with an extended third wave that features an extension in its micro-wave 1. Waves 3 and 5 are shorter than wave 1, indicating the completion of the third wave. The fourth wave is a double zigzag pattern that has finished within the channel. There is likely one wave remaining to complete the impulse pattern, and the fifth wave. The trend may remain within the channel and reach the 100% target compared to the previous wave. However, the critical price level to invalidate this analysis must not be breached. More importantly, after the completion of the waves, we need to observe the trend's behavior within the drawn channel and the type of corrective pattern that emerges, along with the shallowness we may encounter in wave 3 or the two cycles of 1 and 2, or possibly a leading diagonal pattern. Please keep these explanations in mind. In January 2023, the price action of Tesla initiated a new bullish cycle. The first wave consisted of 5 sub-waves, where waves 1 and 3 were of equal length, and the fifth wave was shortened, forming an impulse pattern at a larger degree. The second wave displayed multiple zigzags, ultimately completing a double zigzag pattern. Subsequent price action saw the completion of this impulse pattern, characterized by a brief 5 microdegree wave, followed by a flat running pattern. We are currently at the same level in the third wave, with the critical price point being the territory of wave 1. It is anticipated that after completing the shallow microinsertion of the third wave, we will witness further developments. To analyze the remaining targets more accurately, we will review the 1-hour chart. I have labeled the first wave accordingly, noting that wave 5 was shortened. This is followed by a sequence of 3 waves down and 3 waves up, which recovers 90% of wave up. Ultimately, there is a quick action impulse pattern that completes wave C, represented by a flat pattern. Within this flat pattern, I have identified 5 smaller waves of lower degrees, which represent a 61.8% advance compared to wave up. The flat pattern typically signifies a development pattern under the Elliott Wave principle, and the acceleration in the first and third waves is evident. Our key price is currently within the range of wave 1, but the pattern has moved outside our basic channel. We may see a shallow correction pattern, which could extend the bull market as we approach the completion of the third wave at the same degree. Potential targets for this extension range from 161.8% to 261.8%, and could even reach up to 300%. Let's take a look at the king of cryptocurrencies, Bitcoin. In my opinion, this name suits it perfectly. Since November 2022, we have entered a new bullish market cycle. I want to present two perspectives regarding this trend. First, let's explore the aggressive view. According to Ralph Nelson Elliott's theory, which identifies 5 upward waves and 3 corrective waves, we have observed 5 upward waves, forming an impulse pattern, followed by 3 corrective waves, which typically create a classic zigzag pattern. The first wave has corrected at a higher degree. We expect the third wave to advance to at least the level of the first wave, targeting $107,000, with the possibility of reaching $140,000 or even higher. We see a diagonal leading pattern in the first wave. Key price levels are based on last week's price action. Exiting the main channel will be crucial, as it will confirm that any necessary corrective patterns will align proportionally with the progress made. However, if price action accelerates, any correction patterns may be limited and could potentially be deeper. Next, we will examine the 2-hour chart. As anticipated in recent weeks, we observed the formation of a diagonal leading pattern, along with a flat running pattern for the second wave. It's important to note that the key price level identified in the analysis has been invalidated. If the current price action accelerates, we can expect minimal corrections, but these will tend to be more pronounced. If an extension occurs similar to the classic impulse pattern I have illustrated, corrections will occur in proportion to the overall advance. Now, let's consider the conservative perspective on the daily chart. Here, we also see a diagonal leading pattern in a larger wave followed by a double zigzag for the second wave at the same degree. The advancement of the third wave shows an extension, while the fifth wave of this impulse pattern has been shortened. We have identified a lateral pattern. The fourth wave was more pronounced, correcting between the 38.2% and 50% Fibonacci retracement levels. This is likely to make an extension of degrees within the fifth wave, with the potential to conclude within the drawn channel. Let's examine the silver market for September 2022 using the daily chart. As observed, I have identified the primary patterns 1 and 2 based on a conservative approach. Following this, we witnessed the growth of the third wave, which extended into a larger degree third wave, ultimately completing with a 200% increase relative to the first and second waves of the same degree. Currently, it seems we have entered another corrective phase for the fourth wave at a larger scale. It's crucial to note the key price level that would invalidate this analytical perspective, which is located at the peak of the market price. The fourth wave may be completed with just 3 subwaves, or it could follow the established guidelines by creating a sideways pattern. A reliable confirmation would be the exit from the fifth wave channel, while a price breakout of the fourth wave, and the extension of the fifth wave, would provide an even stronger indication. Ideally, this should range between 38.2% and 61.8% of the Fibonacci retracement, and it mustn't enter the territory of the first wave. For a more detailed analysis of the final wave in this upward rally, I have examined the 1-hour chart. In my analysis, the first wave exhibited an impulse pattern with an extension, while the second wave's correction formed a simple zigzag. The third wave advanced to 123.6% compared to the first wave. The fourth wave was characterized as an expanded flat pattern, followed by a fifth wave that was somewhat shorter than the third wave. It's important to note that the upcoming price action may not be fully completed yet. If it is, we could expect it to take the form of a corrective pattern, which might involve multiple zigzags or a shallow extension in a bullish short-term market. Pay close attention to the invalidation price for this analysis, as well as the exit from the drawn channel, since these factors will provide strong confirmations. If the price fails to hold during the fourth wave, could indicate the emergence of another impulse pattern, suggesting an extension in the bearish market, at least in the context of a simple zigzag pattern. Thank you for joining me in this week's Top 11 Markets of the Week. I hope you found valuable insights and analysis to guide your trading decisions. Don't forget to like, comment, and subscribe for more updates on the markets that matter most. If you have any thoughts or questions, feel free to share them in the comments below. Until next time, happy trading, and stay tuned for more market insights.